My name is Farhan. In this video, you will learn to prepare the schedule of non-current assets. This is question number 14 taken from the 2020 Paper 1 exam. Cubicle PLC is a chain of fast food shops. It has provided an extract from its statement of financial position together with some additional information. So here you can see that we have been given three different classes of assets: land and buildings, plant and machinery, fixtures and fittings. And we have been given the cost at 31 March 2019 for each of these three different assets. We are also given the total depreciation at 31 March 2019 and the relevant net book value, which is what we can calculate by subtracting the total depreciation from the original cost. We have also been given some extra information relevant to land, plant and machinery, and fixtures and fittings. Here we have been provided with accounting policies which talks about the depreciation rate for each class of assets. And the main requirement is to prepare a schedule of non-current assets for the year ended 31 March 2020. So whatever information we are given here, these are the closing balances from end of previous financial year, which is 31 March 2019. And we have to take into account all the extra information that we have, which could be relevant to additions or disposals, and the relevant depreciation, and prepare our schedule of non-current assets for the year ended 31 March 2020. So let's get started with the first set of workings. All right, so if you check additional information number 1, land valued at £200,000 was included in the land and buildings figure, with the rest being the value of its buildings. Land is to be revalued to £500,000. So these are the necessary changes we need to incorporate in our calculations for finding the correct figure for the year ended 31 March 2020. If you also check the accounting policies section, we already know that land cannot be depreciated, and we know that buildings are depreciated at 3% per annum using the straight line method. Okay, first of all, what we have to do is find the cost of buildings at 31 March 2019. And the way we do it is take the total that we have been given in the table for land and buildings, which is £800,000, and then subtract £200,000, which is relevant to the value of land. Now, how do I figure this out? Again, if you check the additional information number 1, you will see that it has mentioned land valued at £200,000 was included in the land and buildings figure, with the rest being the value of its buildings. So it's pretty straightforward. So on that basis, I was to find the separate cost of buildings at 31 March 2019. I take the total of £800,000 and then subtract the £200,000, which relates to land only, and that gives me the total value or cost of buildings, which is £600,000 at 31 March 2019. Okay, we know that during the year, based on the additional information number 1 and additional information number 4, we do not have any additions or disposals of land or buildings. Okay. And we also know that buildings are depreciated at 3% per annum using the straight line method, and land obviously cannot have any depreciation. So depreciation on buildings, if we were to derive that first, we use the relevant rate of 3% that has been given to us and multiply it on the cost of buildings, which we have figured out from the first step of our calculations, which is £600,000. When you do that, you get £80,000 as the depreciation on buildings for the year ended 31 March 2020. Okay. Now, what we want to do is find the total cost of land and buildings at 31 March 2020, which is the financial year that we're preparing the schedule of non-current assets for. We know, based on additional information 1, land is to be revalued to £500,000. Revalued to £500,000, which means the land, which was worth £200,000 just a year ago at 31 March 2019, is now worth £500,000 at 31 March 2020. So that is why when you want to find the total cost of land and buildings at 31 March 2020, I start with the total value of land, which is £500,000. Then I add the costs of buildings of £600,000, which is what we have derived from the first step of the calculation. And we also know that during the year, there are no additions nor any disposals. So once you do that, the total cost of the land and buildings together at 31 March 2020 is £1,100,000. Okay. Then let's look into the plant and machinery section. So after we have done all the workings, then we're going to insert all the numbers that we have found in the final schedule of non-current assets. Okay. So for the plant and machinery, let's check additional information number 2. Some plant and machinery were disposed of. These originally cost £16,000 and were sold for £10,000, which meant a loss on disposal of £240 was recorded. Okay, the relevant information in the accounting policies section is that plant and machinery is depreciated at 20% using the reducing balance method. Okay, so these are the 2 sets of information that we have to use for our workings. All right, so if you check the right hand side of the screen, so starting with the plant and machinery, we know that disposal proceeds is £10,000. So what is the meaning of disposal proceeds? This is the value at which you have sold the plant and machinery. And that is clearly given in the question, was sold for £10,000. As you can see, I'm circling here on the left-hand side. So this is already given in the question. We know that on disposal of this plant and machinery, there was a loss of £240. Okay, so if that is the case, how can we use the disposal proceeds and the loss on disposal to find the net book value of the plant and machinery that we have sold? Okay, so if we have only received £10,000 by selling the plant and machinery, and we know that we have made a loss of £240, then logically speaking, the net book value would be £10,000 plus £240. Because when we say that we have sold this at a loss of £240, we are saying that we have sold this at £240 less than what it was worth. Okay? Net book value simply calculates the worth of a specific asset at a given point in time. So on that basis, we take the disposal proceeds of £10,000 and then add it with the £240, and that should give me the total net book value right before disposal of £10,240. Okay. Now, we know the original cost for this asset was £16,000. All right. As you can see, it's given in additional information number 2. And now that we have figured out the net book value to be £10,240, can you find out the total depreciation? Of course. So £16,000 was the original cost. And right before we sold the asset, it had £10,240 of value remaining, which means throughout the years of usage, the depreciation could be calculated by taking the original cost of £16,000 and subtracting the net book value of £10,240, which gives you the total depreciation of £5,760 for the plant and machinery that we have disposed. You can also look into this from another angle. So let me show you something else here as well. So if you want to find the net book value of any asset at a given point in time, what do? You start with the original cost and then you subtract the total provision for depreciation. So this is the equation essentially which we have used in our calculations. It's just that we have used algebra to make total depreciation the subject, which ends up being the original cost minus the net book value that will give you the total depreciation of £5,760. Okay. Now, what about the depreciation for the remaining plant and machinery for this financial year? Okay. We also need to factor in something else. If you check the last information under the accounting policies section, it says that all non-current assets are charged a full year's depreciation in the year of acquisition, but none in the year of disposal. All right. So the plant that we have sold, which had a net book value of £10,240, we are not going to calculate any depreciation for that plant because based on the requirements of the question, no depreciation is to be charged in the year of sale or in the year of disposal. Okay, so how do we handle this complication now? First of all, you want to find the net book value at 1 April 2019, which is the beginning of the financial year for plant and machinery. And the way we do it is we take the cost of £250,000 and then subtract the total provision for depreciation, and we get a net book value of £128,000 at 1 April 2019. So if you ask me where I got the original cost and the total provision for depreciation from, you can check the table and you'll find that at 31 March 2019, which is the ending balance from previous financial year, the original cost was £250,000 and the provision for depreciation was £122,000, which already gave the net book value to be £128,000. This gets transferred as the opening balance at 1 April 2019, being the net book value of £128,000, which is the same thing as 31 March 2019. Okay, what about the net book value at 31 March 2020? Okay, think about it very carefully. This is £128,000, which was the beginning net book value at 1 April 2019. From there, we are subtracting the net book value of the plant and machinery that we have sold, which is £10,240, and then we get a remaining net book value of £117,760, right? Okay. Again, where did we get £10,240 as the net book value for the asset that we have sold? If you go back to our calculations, you would see that we have used the disposal proceeds of £10,000 and the loss of £240 to get the net book value of £10,240. Okay. Another thing, why are we so interested in net book value itself? This is because we're using the reducing balance method for depreciation as we have instructed for plant and machinery. And when it comes to the reducing balance method, the percentage that you're given should always be applied on the net book value. Okay, so this is the remainder at 31 March 2020 in terms of the net book value for plant and machinery, which is £117,760. And that is our basis for calculating the depreciation on plant and machinery. So we take the net book value that we have remaining, and then we multiply the relevant rate of 20% that we have been given, and then we get a depreciation for plant and machinery of £23,552. And this is only relevant to those which have already been in the books, nothing relevant to any disposals. Okay. Once that is taken care of, let's look into the fixtures and fittings section, which is additional information number 3. So fixtures and fittings were purchased at a cost of £12,000. All right, so we have some new additions, as you can see. Some old fixtures and fittings were used in part exchange at a value of £3,000, which meant a profit of £376 was recorded. The fixtures which were part exchanged originally cost £4,100. And the relevant depreciation rate for fixtures and fittings under the accounting policies section is to apply the straight line at 20% per annum. And also we know that all non-current assets are charged a full year's depreciation and none in the year of disposal. Okay. So what we have to do first is find the depreciation for fixtures and fittings. In this case, before you can do that, because we're using the straight line method, we want to know what's remaining in the books in terms of cost. So what we would be doing now is first preparing the first half of the schedule of non-current assets section. So let's go to the schedule of non-current assets section. So let's focus on the fixtures and fittings column for now. Okay, so this is the opening balance at 1 April 2019, which is £85,900. Okay. We know that during the year, we have purchased more fixtures and fittings at a cost of £12,000, which is what is getting added here. Then we also know that we have exchanged another fixtures and fittings, which essentially means disposing another fixtures and fittings, and that had an original cost of £4,100, Because we disposed it, this is in negative. Again, where did I get this information from? It's clearly mentioned in additional information number 3. The fixtures which were part exchanged originally cost £4,100. Okay, so once you have done that, where you started with the opening balance and you added the new purchase and subtracted the disposal, what you end up with at 31 March 2020 in terms of cost for fixtures and fittings is £93,800. And this is the basis for applying the straight line method, which you will see on the right hand side of the screen. So depreciation for fixtures and fittings, because we're using the straight line method, we have to apply the percentage straight away on the cost. So the percentage is given to us in the question as 20%, and the total cost that we have at the end of the financial year on 31 March 2020 is £93,800. So when we do this two together, we get £18,760 for depreciation of fixtures and fittings for the current year. I also want to show some extra workings here in this case as well. So what is the net book value of the fixtures and fittings that we have disposed? Okay, this could be a multiple choice question in exam, so I've decided to go a bit further into this question. So net book value of fixtures and fittings disposed. We know that the fixtures and fittings that we have got rid of was exchanged at a value of 3,000, on which a profit of 376 was recorded. Okay, so if the net book value of the fixtures and fittings is £3,000 and we have recorded, if the disposal proceeds is £3,000 for the fixtures and fittings we have disposed, and we have made a profit of £376, then that means the net book value of the fixtures and fittings that we have sold should be 3,000 being the disposal proceeds minus the 376 in profit. Okay, and that would mean that the net book value, or the value remaining in the all fixtures and fittings, was £2,624. Okay, so on that basis, if I was to ask you another question, so what is the total depreciation of the fixtures and fittings that we have sold? You take the original cost and you subtract the net book value, which should give you the total depreciation of £1,476. Again, this is only relevant to the all fixtures and fittings that we have sold. Let me break this down further for you. So we know that if you want to find the net book value at any point in time, you take the cost and you subtract the total depreciation. So we have used algebra again, where we made the total depreciation the subject and we subtracted the net book value from the cost. So, which is what we have done here. So this is the cost of £4,100 that is given in the question, and the net book value is £2,624, which is what we have figured out based on the fact that the disposal proceeds was £3,000 and we have made a profit of £376 on that disposal, which would mean that the asset was in fact worth £2,624 before disposal. So on that basis, the total depreciation for the old fixtures and fittings that we have got rid of is £1,476. Now that we have all the workings sorted out, let's fill in everything for the schedule of non-current assets. So we have already taken care of the fixtures and fittings column, so we won't be discussing that again, but let's start with land and buildings. To begin with, at 1 April 2019, we had £800,000 for land and buildings together. And during the year, we have made no additions, no disposals, but we do know the land, which was valued at £200,000 at the beginning of the year, was valued at £500,000 by the end of the year. So which means there has been this revaluation of £300,000, so which is what we have shown here. And that gives us the total value for land and buildings combined at 31 March 2020 to be £1,100,000, which aligns with what we have calculated here as well on the right hand side of the workings. Okay, what about plant and machinery? So to begin the year with, we had £250,000 in plant and machinery. We had no additions during the year, but we do have disposals, and the original cost of the amount disposed was £16,000. because we are preparing the cost section, so everything that has to go here has to be in terms of cost. So £16,000 was the original cost of the plant and machinery we have disposed. There were no revaluations, and therefore we end up with a final balance of £234,000 at 31 March 2020. Fixtures and fittings we've already discussed a while ago. Now let's look into the total depreciation section. So starting with the opening balance at 1 April 2019, for land and buildings, we have £72,000. The depreciation expense for the year is £18,000. Where did we get this number from? So if you check the workings on the right-hand side, you will see that that depreciation was calculated by applying 3% on the cost of the buildings of £600,000, which gave me £80,000. And land is never depreciated, so that depreciation expense of £18,000 comes from the buildings. There were no disposals for land and buildings during the year, and therefore the total depreciation that we have for land and buildings combined at 31 March 2020 is just 72,000 plus 18,000, which is £90,000. Okay. And on that basis, the net book value at the end of 31 March 2020 was easily calculated by taking the total cost and subtracting the total depreciation of 90,000. And we get £1,010,000. Okay. What about the plant and machinery section? So to begin the year at 1 April 2019, the depreciation was £122,000. And based on our workings, all those explanations that we had to go through, all those complications that we had to solve, we found that the depreciation for plant and machinery using the reducing balance method of 20% per annum to be applied on the existing net book value of £117,760 gave us a total depreciation of £23,552 for the year. And that is what we have included here. During the year, we had a disposal of a plant and machinery, and the depreciation for that relevant asset was £5,760, which we figured out here through many calculations and complications. And once we have factored everything in, you will see that the total balance at 31 March 2020 is £139,792 for plant and machinery. And likewise, the net book value should be calculated similar to what we have done for land and buildings. We start with the original cost that we have, £234,000, and then subtract the total depreciation at the end of the year, and you should get a net book value of £94,208 at 31 March 2020. Okay. Last thing is to do the depreciation section for fixtures and fittings. So for fixtures and fittings at 1 April 2019, the opening balance for total depreciation was £30,924. During the year, we had additional depreciation of £18,760, which is what we have derived here. And we calculated this based on the straight line method, and the straight line method simply applies the percentage on the original total cost. And the disposal that we have subtracted here for the all fixtures and fittings was £1,476, which is again what we have figured out based on all the calculations that we have done here. And once you take everything into account, the total depreciation that remains is £48,208, which relates to the existing fixtures and fittings at 31 March 2020. And then you find the net book value at the end of the year by simply taking the cost and subtracting the total depreciation, and you should arrive at the net book value of £45,592. Okay, so that's all for today's lesson. If you found value in this content, don't forget to drop a like and subscribe to this channel, and I'll see you in the next lesson.